Welcome to the Explainer. Today, we're decoding how some massive global headlines are going to directly impact your portfolio right when the opening bell rings tomorrow. We're looking at a highly dynamic, incredibly fast-moving situation unfolding in the Middle East, and we are going to break down exactly how that translates to the Indian stock market.
All right, let's just dive right into this absolute monster of a number, a negative 8.5% plunge in Brent crude prices. This sudden drop was triggered by reports from Pakistani security officials indicating a finalized U.S.-Iran deal to end the conflict in the region. You know, when energy markets get a de-escalation signal of this magnitude, that whole war premium just vanishes almost instantly. But look, as an investor, your job isn't to just sit there and passively watch the global news, right? It's about knowing exactly which Indian sectors and stocks are going to move first. Like this concept perfectly captures. Simply knowing the broader market is relieved won't actually make you money. You need a map of exactly where that capital is going to flow fastest.
So, here's our roadmap for mapping this global machine directly to the Indian market. We'll cover the Hormuz peace catalyst, the crude domino effect, sector winners and losers, the Adani resolution, and we'll wrap it all up with a pre-trade checklist.
Let's start with part 1, the geopolitical trigger centered around the Strait of Hormuz.
Now, what's really wild here is the sheer dichotomy in the news flow right now. On one hand, you've got brokered communication lines dragging Brent crude down to $72.40 a barrel. But then on the flip side, we're seeing conflicting reports that U.S. Vice President J.D. Vance is actually leaving Islamabad without a deal because Iran declined to assure it would halt its nuclear weapons pursuit. It makes the current market environment completely binary and just incredibly volatile. Here's the bottom line. Markets are currently trading on the mere prospect of peace. You absolutely have to stay neutral and watch the actual data, not just trade on rumors. Crude relief is a trade, not a trend, until that Iran deal is signed, sealed, and verified. If talks officially fail, we're going to see the market reverse sharply. If they succeed, the relief rally extends.
Moving on to Section 2, the crude domino effect.
So how does this actually play out for India? It's basically a macroeconomic chain reaction. Crude falls, which immediately shrinks the import bill and narrows the current account deficit. That means we need fewer dollars so the rupee stabilizes. And a stable rupee eases imported inflation, which ultimately gives the RBI room to hold rates, re-rating the Nifty upward.
And why is this so absolutely crucial? Because India imports roughly 85% of its crude oil. Think about that. Every single dollar that the price of crude drops is a massive, structural, macroeconomic relief event. It's not just an energy price, it's literally the single variable that moves the currency, inflation, and multiple stock sectors all at exactly the same time.
All right, let's get into Section 3, sector winners and losers.
Let's pop the hood and see exactly where this relief shows up the fastest. For oil marketing companies, your OMCs like IOCL and BPCL, it's immediate margin expansion because their input costs drop while retail prices usually hold steady. Airlines, like Indigo, get massive relief because aviation turbine fuel is a huge 30 to 40% of their total costs. And paint companies like Asian Paints? They save heavily because crude-derived raw materials make up about 55% of their inputs.
But hey, it's not a win for everybody, right? While those downstream OMCs are basically printing money in this scenario, upstream oil explorers like ONGC and Oil India take a serious hit. Since they're the ones extracting and selling the crude, a global price drop directly compresses their revenue per barrel. You really have to know which side of the oil barrel your stock sits on.
Which brings us to Section 4, the Adani resolution factor.
Because while oil is moving specific sectors, we've got this other massive, localized catalyst adding fuel to the broader market rally tomorrow. Gautam Adani's personal net worth has reportedly surged back to $109 billion. The total market cap recovery across the Adani Group stocks represents one of the most significant wealth restoration events in Indian market history, putting him right back as Asia's wealthiest individual.
This crazy recovery is being driven by a 3-part legal resolution that effectively wipes away a massive 18-month overhang on the entire conglomerate. First up, the U.S. Department of Justice is moving to formally drop their criminal fraud charges. Separately, they've got an $18 million SEC civil settlement, and finally, the group is reportedly nearing a $275 million settlement with OFAC.
So why does this actually matter to the broader market? Well, with these U.S. compliance barriers literally dissolving, the floodgates open for foreign institutional investors, the FIIs, to come rushing back.
Even better, it reopens international dollar bond markets for the Adani Group, which completely revives their multi-trillion rupee expansion plans across infrastructure, green energy, and ports.
Finally, Section 5, Navigating the Market Tomorrow.
So, bringing the geopolitical oil shifts and this domestic Adani catalyst together, how are we actually trading this highly complex setup tomorrow morning? Keep this pre-trade checklist handy. You're looking for 4 specific green lights. Is Brent crude sustained below that $105 ceiling? Are we getting confirmed signals of a US-Iran deal? Is the rupee stabilizing below 96.50? And lastly, are FIIs turning into net buyers? If those flash green, this relief rally has real legs. If they turn red, you need to protect your downside.
I want to leave you with this to chew on for your strategy tomorrow. If that verified deal officially hits the wires and crude plummets below $95, what is your very first move? Are you grabbing OMCs for that immediate margin play or airlines for the massive fuel relief? Think about exactly how these mechanics fit your specific portfolio. Thanks so much for joining the Explainer, and stay sharp out there.